pueden afectar a los mercados. Vamos a hacer un análisis un poquito más internacional sobre lo que está pasando. Hablamos con Jay Pelosky desde TPW Advisory, su fundador. Jay, thank you so much, as always, for being in Negocios Televisión. Good afternoon.
Thank you. Happy to be here.
Jay, Kevin McCarthy is sure that the debt ceiling deal is going to be approved this afternoon, this night for us in Spain. Do you think that this will be the case, that we will have an approval of the debt ceiling deal? If so, how will markets react?
Well, I really don't have any inside knowledge about what is going to happen in Washington today. It does seem as if both President Biden and Speaker McCarthy are confident that a vote will pass. And it's interesting, your second question, the second part of the question about the market reaction, right? Because news of the deal broke over the weekend, and yet stocks were down yesterday and are down, reasonably big today so far, suggesting perhaps that it was a buy the rumor, sell the news. In other words, markets never really took fright that this debt ceiling was going to be an issue. If you look at the volatility indices for stocks or for bonds, there was never really any sign of deep fear or panic. And so I guess it's not a surprise that when we do get a deal, there's no real reaction in the market. And so we're trading off of other issues, some profit taking around the big run in AI, for example. So I don't have any real insight, but I believe and expect, as the market clearly does, that there will be a deal done before any X date, and we'll move on to the next issue as what I call the curtain of FUD, fear, uncertainty, and doubt. The debt ceiling is just the latest iteration of that fear, uncertainty, and doubt.
You just spoke about AI. Later on, we will speak about this. But before everything, I wanted to ask you about JOLTS. Today, we've seen this data on JOLTS. It has been up in April. What can this mean for the trend on the labor market and on the next movement of the Federal Reserve?
Great question. I think the jobs data on Friday is going to be more important than the JOLTS data today. The numbers were bigger than expected, so more job openings, which suggests a still kind of hot labor market, and yet interest rates are rallying. So again, the market doesn't really act like you would think on data such as the JOLTS report. So as I say, I think the jobs report on Friday, where the consensus is for about 190,000 jobs, new jobs added, will be more important for the market. And it's clear that the labor market, while still solid, has decelerated, right? Because 6 months ago, 12 months ago, we were adding 500,000 new jobs per month. Now we're adding around 200,000 new jobs per month. And so if you look at that, if you look at the wage gains, the things are cooling, but not falling out of bed, let's say. And I think that's, at least for us at TPW Advisory, we've had a view of a middle path between high inflation and deep recession. And we think we're going down that middle path in the US and globally. And so to us, a cooling jobs market, but not a jobs market that's, let's say, falling out of bed or printing lots of negative numbers or job losses, that's actually a pretty good environment. And I think it's not a bad environment for the Fed, though we will see in a couple weeks.
Mm-hmm. You spoke before about artificial intelligence. It is a new mania in the stock market. Jay, do you think investors should go still for AI stocks, or is it too late already?
Well, I don't really think it's a mania. I think it's a reality. And when NVIDIA reported, the thing that really got everybody excited was its forecast for the upcoming quarter, where its revenue forecast was up, 50% or so, 60%, way above expectations. So that's forward-looking company guidance, which drove the market last week, a week ago today, I think. And so I'm a believer, we're a believer in the importance of AI, and it's going to be a prevalent, pervasive factor in the global economy in the coming years, and it's moving very, very fast. And that's the point of the NVIDIA number, right? Within 1 quarter, they marked up their revenue estimates by a tremendous margin. That shows you the speed of AI. And so how we're playing it is through the semiconductor space, which we see as kind of like the pick and shovel of the AI age, right? So there aren't really companies that are, you know, AI specific that you can buy in the stock market. AI is being used by many large companies, and it's very expensive to do the large language model work. And so in a way, the mega cap stocks have a little bit of a moat because it's too expensive for other companies to do it. And so for us, it's the big cap tech, and it's the semiconductor space. Now that's over the, you know, that's where we are today and going forward. Would I buy those stocks right now? Probably not. Reason being, they're overbought, right? We've had a huge surge in the last week. And so today's action in a number of those big cap names is healthy. There's some profit taking end of the month, people closing the books on May, taking some profits. That's all good. These stocks are now, the NVIDIA had a short-term RSI of over 80 yesterday. The Qs had a short-term RSI of over 78. Typically, when it's above 70, it's overbought. And so you want to wait when things cool down a little bit. And then when there's a sell-off for whatever reason, you can start to add positions there. So medium-term, long-term, AI is for real. Short-term today, would you be a buyer? Probably not. Let it cool off a little bit. Let that overbought condition be worked off. And then you can look for your area of entry and opportunity.
Jay Pelosky, TPW Advisory Founder, thank you so much for being in Negocios Televisión. It's been a pleasure, as always.
Thank you. Bye-bye.